In my very humble opinion, I think we're seeing some far more concerning signs in the market than what we have experienced over the weekend in the Middle East, with Israel attacking Iran on Friday and continuing throughout the weekend. This, of course, is in my very humble opinion. We know there's a lot of shit going on over there, but we want to look at the prices on the charts. It is difficult. It's the game that I guess you're here to play, like I am, when we're investing or trading in the markets, to separate the logical when it comes to the charts or your own fundamental analysis and the emotional when there is seriously crazy and unfathomable things going on around the world. I don't have any other words to say for it. So what I'm going to do is just get straight into my analysis of the charts, looking at Bitcoin today. We've got cryptocurrency data to get through, the S&P 500 closing out yet another week at fresh high prices for the week. The US dollar hitting fresh low prices for the last 3 years, and heaps more to get through, along with the war update. But more importantly, what I think is more concerning for the markets, for my money in the markets, again, got to separate the emotions here, than what is going on between Israel and Iran. So hit the like, subscribe to the channel if you want to hear something different to what's out there, typically from many other channels that basically throw the doom and gloom at you day in, day out. You're at your home of macro cycle analysis. If you've been here before, thank you very much. You guys get the deal. If you are new, thanks for joining me. So I'm just going to start out with the headlines, of course. I think everyone has read about this. I don't need to dive too much further into it. Israel, Iran, this happened on Friday morning. In terms of the markets, and I'm trying to really separate the emotions here from what is going on there to the markets themselves, because that's where we're making money, is that the market at this stage has seen this as a nothing burger, and it has nothing burger meaning it's not going to affect the markets. And this has happened for the last several years. Whenever we see fights break out, wars, conflicts, as Google likes to call it, in the Middle East or anywhere else for that matter, like Russia, Ukraine, this has absolutely skyrocketed since that point for the rest of the markets. And so I just make this comment early on. I know it always gets a little bit triggering there, especially if people have got families involved in those regions of the world and they're experiencing it firsthand. The idea here is that I think the markets will see this as a nothing burger, just like they have done every other time in the last 3 years. This, of course, is not the different type of conflict. It's a conflict nonetheless, and it's always a conflict in the Middle East between whoever it is: Israel, Iran, Israel, Gaza, Iran and Iraq, Kuwait in the 90s with Iraq and Kuwait. Like, there's just something always going on. For the families, of course, it's a lifetime of hurt. You can't bring back someone that has been killed in this sort of conflict. But the idea here on the channel, I'm not a geopolitical channel trying to assess who's going to win and who's going to lose and what this means to the rest of the world. My job is trading and investing. We could talk about the other stuff later, but you don't want to mix the jobs because you'll do very badly at both. So one thing I think about this whole scenario when it comes to the markets: be fearful when others are greedy, and greedy when others are fearful. It sounds disgusting to think of it like that when you are talking about people's lives. But again, what are you trying to do here? Are you trying to bring back people from the dead? Are you trying to stop the war? Or are you trading or investing in something else? Others might read this, interpret it a different way, but I think this is a good point. And to take a slight less humanistic edge off this particular quote, something I wrote down earlier is that I think you don't need to fear the fear. You should be fearing the greed. And every time we get a lot of greed in the market, that's when it's time to be fearful rather than fear the fear. And the cycle that I'm referencing, and I've got a couple of cycles to have a quick overview here today with you guys, is of course the 18-year cycle. We have 14 years up and roughly 4 years down. It's about an 18 to 20-year cycle. Remember, no one rings a bell at the top of these cycles to tell you your time is up, your 14 years is done, and here comes the 4 years. And just like they won't ring a bell at the bottom and tell you, all right, time's up, the 4 years of complete doom and collapse and recession is over, it's time to go up again. Usually what happens at these lows is that the extreme fear continues to pound home day in, day out, week in, week out. You get it, month upon month. But what you will notice with the price is that it's finding it very difficult to push any further down, anything substantial compared to the fear that we are experiencing. The fear maybe from the news, or from what's going on in the economy, or what we're seeing day to day in business. Maybe in your jobs, you might be seeing a lot more people getting sacked and that sort of stuff. The price chart of the markets will potentially suggest that the worst is behind us, and we just have to wait out all of the bad shit before we can start going up again. So at the moment, I don't think we're at this stage. I don't think we're about to peak on some sort of extreme fear news of the wars. And I guess even by today, most people probably aren't even talking about the war unless there is another strike in the next hour or two for me to film this, edit it, and then upload it. Because that's essentially what happened on Friday. It just happened at the point that I was filming. And as I uploaded, the strike happened, and all the comments were about people saying, well, you couldn't even talk about the war that happened over there and the markets went down. And essentially, from that point, if it's on one of my charts here, the price is exactly the same, barring 0.4% from where it was when the strike happened. So I think, at least in my opinion, of course, this is just a pure example of an absolute nothing burger. Maybe until the market figures out something else. Maybe something else is building in the background that we just don't know of. But in terms of this news, over the last 2 days, essentially Bitcoin hasn't gone anywhere. Of course, the US markets have been closed, but they have just opened this morning in pre-market trading. This will, of course, take off tonight for us, but then, of course, morning for Americans. But you can see the new week opening here. If this was going to be something extreme, I would have expected to open lower or even further lower if you had all the amateurs just basically selling off the news here, but nothing has happened yet. And it may do because we've seen several weeks up. This has been a straight up bull market out of that April low. You got 1, 2, 3, 4, 5, 6, 7, 8, 9 weeks in a row to the upside. Don't worry about the greens and the reds or the colors. We're just looking at the pure higher highs and higher lows, essentially what the price action is actually doing, what the buyers and the sellers and everyone that's involved in the market has been bidding up the market for the last 9 weeks straight, putting in higher highs and higher lows. That's insane. So that's a look at the S&P 500. We're just essentially putting this together with the fear. And of course, I've got to get to the whole point of what I think is more concerning now for Bitcoin, which I know you guys are here for. But just to give you a visual representation of, I guess, the last few years, all of my arrows over here, if I unhide them, let's see what I've got. There they are. These are all the fearful, extreme fearful times lined up with the news events that happened at that time on the chart. We had tariffs back here. You can go back to the Middle East war in April. This one here I even took out. This was the Japan yen carry trade that shocked the market, and then it basically rebounded. Another Middle East crisis. This was again, I think this was Israel and Iran again in October 2023. We had a debt ceiling crisis. We had a banking crisis. We had an inflation crisis. We had a rate rise crisis. When I say we, I'm talking about the US. Yeah, I've got an Australian accent. I'm here in Australia, but I do all of my trading based off the US. There's no point in doing it based off the Aussie market because the Aussie market doesn't move the market or move the world. The US market does. So that's why I have such an interest in the US markets, because that's what I do full time. So you got the Russian war here as well. Back in February of 2022, market bounced and then everything came down from that point, but the fears were based on rate rises and inflation, not on a war in Russia, because they know that this doesn't necessarily affect the US economy. And then, of course, we can go back even 5 years and you had the major COVID dump, and then you even had COVID 2.0, and that did jack all to the markets. The next cycle that is lining up is, of course, the fourth turning. If you're unfamiliar with the fourth turning, I suggest at least, this book is so flippin' thick. It's extremely heavy. By the time the fourth turning comes and goes, you probably wouldn't even have finished this book. Start with this video. It's 10 minutes long. We're in the fourth turning. What does this mean? It's pretty simple. You're looking at a breakdown of about 80, 90, 100 years Of course, it's simplistic here, looking at 20-year blocks, essentially generations, and how things come and go over these years. And eventually, we all start the turning again, and we forget all the lessons that we've learned in the past, and we come through to where we are now, which is basically coming to the end of this next turning, I guess. All of the turnings coming together, the first, the second, the third, and the fourth. And in the fourth, we have the crisis, and then the crisis leads to the good times after that, after a significant breakdown of war in the world. Then we got to rebuild again, and then we go through the same sort of process, except the positive here for humanity is that we do it in a cycle that continues to rise. So although we repeat some of the stuff from history in terms of wars and so on, we continue to get better. At least, of course, that's my view. I guess other people think that everything's just going to come crashing down and we go back to the gold standard. I don't think that's the case, but there are other reasons why the market could come crashing down. One I've alluded to is that interest rates in the US don't seem like they are ready to come down, or if they do come down, stay down for very long. This, of course, will eventually put pressure onto the economy, onto real estate and mortgage holders and all sorts. The reason why these interest rates can't come down for very long is because the bonds have continued to fall, the yields have continued to rise, and essentially the Fed is a little bit stuck here. They know that things are hurting on the other end, basically for the economy and people with their mortgages and so on, but the American government needs that money to come in. So if the bond prices are going down, the yields have to go up. Otherwise, there's no interest from the market to be giving money to the US to keep buying up this debt. So they have to keep these interest rates high, which of course will then put pressure onto the homeowners, people with mortgages. And then of course that just is a flow-on effect throughout the market. Now, something I discussed in detail in the videos last week, in this video here, and in this video in greater detail, looking at every single cycle, is around the theories that we have with TIA, so the Investor Accelerator. That's our premium membership, understanding the cycles, how they overlap, and how I go through and invest in them, or how the members are also discussing how they are building their plans to go through and invest throughout these cycles, with the end peaks of the bull phase for some cycles and for potentially other markets which are getting into their next breakout points, as I've also talked about here with silver. So if that interests you, check out the link in the top of the video description. That is for our TIA Premium and the free reports. We have 3 reports coming out this week, one for the economy, one for Bitcoin, and another there for some altcoins, just to keep the degeneracy going on just that little bit longer, because everyone loves it, and the short-term trading. I'll come back to the degeneracy of altcoins in just a moment. We've got a few updates happening there with ETH and Cardano, in fact. Taking a look at BTC, it's still holding out here at 105,000. The key level that we've been watching on the channel is around $106,500, which has been a key level of resistance throughout this entire all-time high territory. Now, I've got the little double top here that the market, at least in the next, hopefully 20 minutes, is going to close above 105,400 after the Israel strikes, of course. That's what dumped the market here on Friday. Sorry I didn't get the video out. I went out surfing, and look what happened. The market doesn't care. It's closed at the same price for the last 4 days. So again, more nothing burgers in the works. Nonetheless, 106,500 is the key level here for BTC in the short term. Otherwise, if we're seeing this market fall, the same prices remain as last week, so I don't need to go through it in great detail. It's essentially looking at the 50% level here, $93,000. So any movement down here, yes, it's going to affect the market. People are going to be freaked out as all hell, but we're still in a strong position for this particular move to the upside. The concerning part for me is a breakdown of 93. So it's basically underneath these 2 major swing bottoms where Bitcoin held the line and then bounced from, underneath 93. And that could be coupled with a lack of interest from the market. I'm going to come back to this quote in just a sec, but the lack of interest, the thing that I think is far more concerning at this point, is because these are some of the lowest readings we have seen in the last 90 days and in the last 12 months, and getting close to some of the lowest readings in 5 years for Bitcoin on the Google Trends. Now, I think this is still very relevant. I don't think ChatGPT has taken over from the search volume with the majority of people looking for answers in ChatGPT versus Google. Google's still got a massive stronghold on the market. You can see that from the data and statistics piling in, but nonetheless, looking at the search volume here, which is getting quite concerning, we're at 38 for Bitcoin in the last 90 days. The last time we were at these levels was a couple of last week, back at 38 and 39. Again, 37 in May. So where's my dates? 1 month ago. And then the lowest other times is basically 37, once 34 in April. And then pretty much we're bouncing around the lowest points here. So those mid to high 30s in the last 90 days. Crypto's basically fallen off a cliff here. I'll come back to a tiny silver lining here as we bounce around these lows. But first, I'll just take a look at 12 months and 5 years. We're at 27. We haven't seen this level of interest. It's we have to go all the way back to October of 2024. So what's that, 6, 7, 8 months ago, and that was still reading at 28, 29, 30. And then we have to go back to 12 months ago at 30 as well. So this is the lowest readings in 12 months for Bitcoin. And for altcoins, I mean, that's still dead there. 12, where is it back here? 12, 12, 14, 11, 12, 12. So also crypto is at its lowest readings. And then we go back to 5 years. Remember, I'm going to get to just a slight silver lining here, as we can see it on this chart. Bitcoin's at 17. The only other time is basically this low here in April. It hit 18. You're at 17 in October. So pretty much you have to go back 2 years to find anything more significantly lower, which was in Q3 of 2023, where it was reading at 15. So from that point, here's the silver lining. Generally, the search volume has bounced. Hopefully it bounces for all the positives, where we would see prices increase for Bitcoin and altcoins, which is why I've also covered the price charts here. If we saw this break down from 93 and the search interest increase, that could lead to further downside because you've got more people interested with the market crashing as opposed to the market going up and more people interested. But none of that's happened yet. It's just something I've keep in the back of my mind for, I think, how concerning the lack of interest is here. But as I said, with each of these occasions, we've begun to bounce around these levels. Sometimes, and for this bull market, in most cases, for the positive move, basically for the bulls to the upside. Now, I've had a bit of a washout of the upside as well, so that's also can be seen as a positive for the bulls to regain control after things get too frothy with a lot of leverage in the market. So that's another positive there. And for the daily exchange volume, the 7-day moving average, we've also seen higher prices here leading into the end of last week. So the 13th and 14th rising out of a higher low. So that's a good sign there. And for the USDT dominance, it is just squeezing between two 50% levels. The move to the downside, which got rejected 2 weeks ago at 5%, and this week is trying to close above the major 50% level at 4.75%. We have still not broken down from the all-time support line, what I'm calling the all-time support line. That is really the line in the sand for me to get any sort of movement back into the bull market for altcoins. And of course, Bitcoin as well. But this thing can keep coming down to 4.3, 4, 4.4, whatever, and Bitcoin will still do relatively well. But yeah, if this keeps moving up and breaking higher, obviously concerning for Bitcoin and altcoins. So the idea here is, I'll come back to this because I said I was going to mention this quote, is we're not in the business of calling tops and bottoms. We're in the business of making money. Just I'll repeat that for myself. I'm not in the business of calling tops and bottoms. We're in the business of making money. Tops and bottoms are just a bonus if they happen to come through. This is basically my interpretation of Peter Lynch's quote, far more money has been lost by investors or traders preparing for corrections or trying to anticipate corrections. So basically, this thing's going to crash, it's going to crash, it's going to crash. That has been lost in the corrections themselves. How does that even work? Like, what do they even mean? Well, on the way up, you often hear about all these people calling tops. And I see it in the comment section. Everyone says, this is it. This is the top. This is the top. This is the top. And they'll call the top all the way up because it's breaking out. And they say, I can't keep going, can't keep going. So they're losing money all the way up trying to call the top as opposed to just trading the market up and then trading it back down if that's part of their plan. They don't have to trade it back down. Maybe they just take profits when they see some signals to say, yeah, look, I've made some profits, time to get out or get out of some of my position. And so we could be in something like that at the moment. Not trying to call any tops here, but for your trading, investing, maybe it's a period that you'll be watching for any sort of signs of a breakdown, and you think it's too much for me right now and I want to be able to sleep. Therefore, I'll take something off the table so I have something to show for all the effort I've put in over the last couple of years, because this bull market has been going on now for over 2.5 years. You probably want to take something home with you. For now, I'm not trying to call that the market is over. I don't have any other signs here to say that the top's in, but there is signs that things are drying up at the moment. And if that continues on, then you'll probably get some further signals around 93K. Until then, bull market. So nice and simple. I hope that that's what the message is there. So USDT grinding through here. Now on to some altcoins. And we've just seen the lowest weekly close in 4 years. This is for the all the altcoins, excluding the top 10. This is the lowest weekly close in 4 years. So not a great sign for everything outside of the top 10. But within the top 10, it's a slightly more brighter picture here. So this one excludes Bitcoin and ETH, but includes all the other top 10 altcoins and the stable coins, which could be the reason for this looking more stable than the others chart. For the stability here, it's still above just the 50% level of the run up. So we have the run from April into May, and that's this line through the middle at 809 billion. So call it 800 for a round number. And that was also roughly around those tops in March. And the movement to get back to the 50% of the downtrend now is about 9%. So this market, as we can see, total 3's got to rally roughly around 9% to put it back into the first strong position. And then I'm looking for a rally of 15% to get it back above all the previous tops, above the 50% at 909 and above that 950 to 960 billion that we've been talking about now for the last several weeks on the channel. So that is basically the chance of an alt season for altcoins as of this week with the close. It's in a weaker position through here at 960 through 909, but just holding the line here at 809 million. So speaking of altcoins, ETH has continued to hold the line here for 6 straight weeks, testing many 50% levels at $2,700 and $2,900. Still no breakout, still holding at $2,500, still above the diagonal from the lows here. You can see the low from the cycle low to the October low, and it's just holding the line. So pretty much deciding what it wants to do over the next couple of weeks. Breakouts above this level, much stronger. If it holds here too long, we're going to break down and test $2,100. And as for ADA, we haven't talked about ADA in a long time. This is from the man himself. Cardano founder Hoskinson proposes swapping 100 million of ADA. So he's saying he's going to selling. He's selling ADA for Bitcoin. You can't, I mean, you could swap it, but you're getting rid of it to someone else, and you need to buy that Bitcoin. So you're selling ADA for Bitcoin and stable coins to try, and the article goes on to talk about propping up the DeFi system for Cardano. So you can see that over here. You can read it for yourself, but essentially maybe he's conceded here that he needs to do something else, and ADA tokens are going to get hit on that. That is not to say it's a sell signal. Always follow the charts. But I thought I'd just bring that one up there because I know how much ADA people absolutely love it. And in terms of a weekly closing analysis here for the rest of the markets, S&P 500 had a fresh high price here for the week. The close, not the greatest close. We had a reversal, but at least it's still just above the previous tops here. If we get a pullback or a pause, that's not going to be the end of the world. We've talked about this before in terms of the season of the market here. We go back to the daily and throw on our 5-year cycle. There it is, little pop, and then basically another grinding period here. We talked about the grind through here, and that's essentially what happened. There was a move higher, and then another grind through quarter 3 before quarter 4 gets a little bit easier. The US dollar also on the week closed out to be one of the lowest weekly close in 172 weeks. Got to go all the way back to February 2022. And if it continues at this rate on the monthly, looks like we've also got another lowest monthly close in over 3 years lining up. It'd have to get back above 98.4 to emit that. It's got to keep rising here, get above 90, basically 99, 99 and a half to be not the lowest monthly close. But essentially that's not looking good for the US dollar, and that is part of what's going on here, in my opinion, of course, my analysis with the bonds and the yields. People are dumping the US dollar. Silver, on the other hand, has closed out another strong week, 2 weeks above the $36 level. So nice and strong there. This is all part of the analysis I talked about on the channel with a potential multi-year bull market in the making, breaking a 13-year high. I'm not saying it's going to run for 13 years, but it's broken a 13-year high. The extension I have here on the chart has now hit 100%. So this silver market has run the same move from 2020 into that top of 2021, projected from the low. It's done a 100% move now. So either signs for a rest here, or it's going to be a nice quick run up to around $45 over the coming weeks. Now, cycles are obviously a massive part of my investing plan. Of course, the guys at Premium. If you are a serious investor and trader and want to learn more about that, links in the top of the video description with how you can plan your investment strategies over the coming years. Now, we've also looked at oil as a commodity here, one of the commodities that has been climbing that could potentially put pressure on inflation, which then goes on with the story of interest rates and so on for the end of the cycle that gets a little bit tough for the everyday person, and that has obviously pumped up here. But of course, this is also an abnormal bar on the back of the war news as well. And we know what happens with abnormal bars on the back of news events. Sometimes they take a little bit of time just to pause and digest the move, or they eventually give back all of those gains. So we'll keep an eye on oil at the moment as it breaks out of $65. And the commodities index has also continued to climb higher since the April low, putting in some fresh highs here. So this is basically made up of oil, metals, softs, and this chart I'm suspecting is going to continue to climb higher, especially if it breaks out of 600, which again puts the pressure on inflation for the end of this cycle, which we all know is not going to end very well, of course, if that's what we are continuing to follow. Like, subscribe. I'll be back with another massive update. That is what I think is far more concerning for the markets. And I know I'm a bit more of a Bitcoin focused channel. That's what I think is more concerning for the markets than the war in the Middle East, is that waning volume for Bitcoin and for altcoins at this stage. I would like to see at least the price sustain here while the interest eventually comes back. If it doesn't, we'll revisit that on the channel and see what happens from this point. Thanks again, guys. I'll be back with you in another video. Take care. Peace out.